Hello everyone and welcome. This is chapter 10 of the TSR Masterclass. Let's dive right into it. So, we've basically learned almost everything there is to know about CRT and market structure. That being said, today's chapter is going to be based on building your very own trading model. All right, so first off, skip this entire lecture if you have already decided to stick with one of the previous models that I have already taught you, meaning if, of course, you want to use the 9 a.m. CR model, skip this lecture. If you want to use the 5 a.m. 4-hour CRT model for Forex, skip this lecture. If you want to use or are already using the 6 a.m. 4-hour CRT model for futures, skip this lecture, etc., etc. What I am trying to say here is if you have already found the model that you enjoy to trade, the model that you will stick with for the time being, then skip the lecture. There is no reason to overcomplicate it. Now, for the more advanced students, the ones who want to add more models to their toolkit. Okay, so I hope the beginners are not watching this. This is a video for the more advanced students. Do not worry if you are not at that stage yet. You will eventually get there. And I also want to say something else. It is not necessary. All right, you do not need multiple models. You can make money using one model. You do not need to create your very own model. All right, so this is how the 9 a.m. CR model was created. This is how every single model is mainly created, okay? So like I said, by this point, you have learned many different models based on CRT concepts. I have shared both lower time frame and higher time frame CRT models that you can use in your day-to-day trading. These are some of them. I have also released more. This lecture is catered to those who want to focus on creating their very own models using CRT and other signatures in price action. So what are the requirements for a model? Your model will be based on time and price, time being the most important factor. Now, a lot of people get confused when I bring up time or when any other mentor brings up time. People tend to be confused, which I can understand why traders tend to overcomplicate absolutely everything. So I can understand why when somebody brings up time, traders automatically get confused. So what do I mean when I say time? You will need to focus. You will need to choose a specific candle or time that you would like to master. A specific monthly candle of the year, so a specific month of the year, a specific week of the month, a specific day of the week, a specific hour of the day, or any of the ICT kill zones. This is going to help you determine when and when not to take trades. Little spelling mistake here. I wrote take twice. Anyways, patience is key. Okay? The time aspect of your model will help you stay patient. The time aspect of your model will help you understand when you need to be participating in the market and when you do not need to be participating in the markets. Trading all day long is not ideal and will lead to failure. You need specific time slots in which your model is favored. The most successful traders have specific times of day that they trade. They know exactly when their model should appear and they know how to execute it at that specific time. Okay? More requirements. Locate a CRT that you would like to master. Example, if you want to master the 9 a.m. 1-hour candle, then you would focus on the 8 a.m. 1-hour CRT. Hence the creation of the 9 a.m. CR model. If you want to master the 9 a.m. 4-hour candle, this is for Forex, then you would study the 5 a.m. 4-hour candle, 5 a.m. 4-hour CRT model. The 5 a.m. 4-hour candle would be your CRT range. The CRT that you choose provides you a range that price will be dealing with during the candle that you choose to master. The goal here, buy low and sell high. What does this last statement mean? This means that the CRT candle, basically the candle right before the candle that you would like to master. So in this example, if you want to master 2 p.m., you would use the 1 p.m. 1-hour CRT candle, draw out the high and low, and as soon as 2 p.m. opens, you already have a price range, a timed price range, that price should be dealing with. You look for a turtle soup, buy below the open, turtle soup of the CRT, entry long, targeting the opposing end of the range, buying low, okay? Very important. Your model now has a time-based range and a time-based entry / turtle soup, okay? So these are the two aspects of time that are required for your model. Number one being the specific time of day, day of week, week of month, month of year, or kill zone that you will be trading in, that the model will be executed in, and the specific CRT candle that you will be using, okay? You now have both time aspects cleared. As for the entry confirmations, here are some entry confirmations that you can use to enter at the low or high of the CRT. Before getting any further into this lecture, I want to explain that this will be a quicker lecture, however, very, very important for those of you looking to create your own models. I would also like to say that the creation of your model is just as important as understanding market profiles and the higher time frame bias and narrative. All right, bias, narrative, and market profiles are completely separate from models. Models are used to enter price based on the directional order flow that a trader sees. If you do not see any directional order flow, then the model is useless. The model only comes into play once the trader is in alignment with the correct directional order flow. Okay? That means before you even consider creating a model, you must know how to create your own anticipations of price action. What is the narrative? What is the bias? Where is price going and why is it supposed to go there? Okay, the narrative is why is price going there, and the bias is where is price going, okay? That being said, let's dive into the confirmations that you can use to enter your trades. Not all of these need to be used. These are many, many different entry confirmations that you can use inside of your own model. Pick and choose. Whichever ones you pick, you need to backtest. See if you like them. If you don't like them, try another one. Are they explosive? Do you like explosive price movements? Would you rather a slower price candle? What do you want to see? Okay, so here are some confirmations. We got the lower time frame CRT within the higher time frame CRT. That's basically a 15-minute CRT within the 1 hour, or a 5-minute within the 1 hour. A 15-minute CRT within the 4 hour. A 4-hour CRT within the daily, etc., etc. Okay. The next confirmation can be a higher time frame key level. Is price tapping a higher time frame key level? If it is, you can use that as a confirmation. There needs to be a key level before I enter price. A higher time frame fair value gap plus a lower time frame turtle soup. So for this confirmation, you would focus on your CRT, look for your entry, and then look to the left-hand side of your chart. look for a fair value gap. And with that CRT, when we purge the high or low of that CRT, let's just say in this example, we're purging the high of a CRT. Is that CRT, is the candle that's purging the CRT high also turtle souping a lower time frame high within a higher time frame fair value gap? If so, you can enter a turtle soup style entry off of that lower time frame turtle soup within the higher time frame FVG, going for a 1 to 3 R to R trade. That in itself is a model, okay? For those of you listening, writing notes, write that down, rewind, write it down. It's a model that you can backtest, okay? The next confirmation would be SMT. Don't worry, we have a couple of slides diving into it. The next confirmation would be higher time frame bias and narrative. Is your trade, is your entry model in correlation with your higher time frame bias and narrative? Meaning, are you entering short when the bias is bearish, and are you entering long when the bias is bullish? Does your trade need to be in accordance with the bias and narrative? If you prefer to trade in correlation to the bias and the narrative, then put that as a filter to your trading model. All right. Next, we got the market structure shift. This is when the low that caused the purge of the high is broken, or in the opposite scenario, when the high that broke the low or rejected the low is broken. Okay. Next, we have the change in state of delivery. So CSD or CISD, whatever you guys want to call it, doesn't really matter. This is basically an order block formation. Remember guys, a change in state of delivery on the higher time frame is a market structure shift on the lower time frame. If you guys get confused with market structure shifts and want to validate them, head over to a higher time frame. Okay? Another confirmation that you can use is the candlestick open. What does this mean? This means that one of your filters, one of your confirmations would be to find your entry below the specific candle that you are trying to master. If you are trying to master the 2 p.m. 1 hour candle, your goal is to enter below the open of the 2 p.m. 1 hour candle if you are bullish. That can be a confirmation. What are some entry signatures that can be used? So I am famous for using the order block. Now there are a few others that you can use to enter. One being the turtle soup. I am not teaching it right now. In the future I will, don't worry. Everything with time. Turtle soup is the most advanced, and if I released it early, then teaching order blocks would basically be useless, okay? Nobody would want to learn order blocks if they could learn turtle soup, one step at a time. Anyways, turtle soups would be purging highs and lows. Okay, so this is a turtle soup. We purge the high and break down. A rejection block, which is the wick right here. So an order block forms when the price closes below. However, we have a rejection wick that price taps into and pushes down. A rejection block is another entry signature. We have the classic order block entry right here. Price purges liquidity, creates an order block, close below the order block, confirms the order block, validates the order block, tapping back into it, entry short, targeting the opposing end of a specific range. Then we have a propulsion block. This in specific is very, very high probability, harder to spot and see, but if you can master using propulsion blocks, good for you. Not many people use them. It's a hidden gem from ICT's core content month 4. Okay. Yes, the tweet that I sent out and the Telegram post that I sent out is talking specifically about the propulsion block. Okay. Next, we have the fair value gaps. Do you want to enter when price hits into a fair value gap? instead of the order block? Would you rather use a fair value gap? Do you want to use a fair value gap and an order block? Meaning, the only time you will enter price is if there is a fair value gap and an order block, and price tests the fair value gap as well as the order block at the same exact time. Do you want to use that as your entry? Very valid as well. Last but not least, we have the breaker block. What is this? This is the low that rejected the high as soon as it is broken through, okay? Right here on the bottom right of your screen, you can see a breaker block. Thick down close candle. What is a breaker block? A breaker block is an order block that was broken through, okay? So this is a bullish order block when price is rising up. We turtle soup highs. We have the first high turtle souped, and of course the other high turtle souped. 2 levels being souped. Mark this down in your notes and go study what happens when we soup 2 levels. Anyways, this is the internal range, and this is the, I guess you can say, micro range and macro range, okay? All right, price turtle soups the highs, coming back into this order block, at least what people are thinking is an order block. As soon as price closes below it, below the low with this specific candle, it confirms that the order block was broken through and became a breaker, a broken order block, a breaker block. As soon as price closes below, you can now use the breaker block as an entry to get short. Breaker blocks usually have close to 0 drawdown entries relative to the propulsion blocks as well, okay? Now, let's move forward. What exactly is SMT? SMT stands for Smart Money Techniques. This is a trading concept that analyzes the relationships between correlated and inversely correlated markets with a particular emphasis on identifying divergences. This may be sounding confusing to you right now. Don't worry, it will all be simplified in images. SMT is a technique traders use to spot price discrepancies between related assets. For example, when looking at the US dollar index, the DXY, alongside the Euro USD, you typically expect inverse movement between them. If the dollar index makes a lower low while the euro makes a higher high, this divergence is identified as SMT. An SMT will prevent CRT highs and lows from being turtle souped at key times of the day. Write that down. Okay? I moved fairly quickly through this, but it is very straightforward. ES and NQ move in correlation. That means when ES makes a lower low, NQ should be making a lower low. What happens when 2 assets that are supposed to be correlated no longer are correlated, meaning ES is making a lower low and NQ makes a higher low? That is an SMT, okay? Qualities of a high probability SMT. SMTs that form at key times, kill zones, 9 a.m., 6 a.m., etc., etc., 3 a.m. SMTs that test key levels, high probability. SMTs above or below the CRT high and low, and SMTs at previous days or weeks highs and lows. Meaning if you see an SMT potentially forming at the high or low of the week, it is likely to be a high probability SMT. Same thing goes with the daily highs and lows. Use SMT as a point of confluence to enter your trades. Do not pattern trade SMT. If you do, you will get destroyed. It is not a pattern. Okay? SMT is used as a confirmation when looking at the power of 3, when looking at accumulation and distribution. You have to first know where the market is going. What is the draw on liquidity? What is the bias? What is the narrative? Then you can use SMT as confirmation. Where is smart money positioning themselves? SMT shows you, hints to you, where smart money is positioning themselves before the move up. All right, so these are some examples of SMT. If ES makes a lower low and Q makes a lower low, price should continue going up. That is bullish. If ES makes a higher high and NQ makes a lower high, that means price is bearish and we should go down. Opposite scenario, if ES makes the lower high and NQ makes the higher high, that is bearish as well. Same thing on the other end. If ES makes a higher high and NQ makes a higher low and NQ makes a lower low, then that is bullish. All right. These are the assets. So the bottom goes with the bottom. This goes with this. This goes with this. All right. So look at these charts. I'm not going to explain everything. It is very straightforward. Screenshot this, write it all down, and let's move forward. The propulsion block. What is it? First off, this is explained in ICT's core content month 4. If you want more information on it, go watch it yourself from ICT. Okay? The propulsion block is very similar to an order block, however different in the way that they form and in the way that they are invalidated. A propulsion block is formed after the order block. As price moves into the order block, we will anticipate the formation of a propulsion block. Okay, so after the order block is formed, when price is moving into the order block, instead of looking for an order block entry, wait for that candlestick to close. If the order block is respected, then the propulsion block is created. As price retraces into the propulsion block, we expect to see explosive movement in the opposing direction. The mean threshold of the body, the midpoint, should not be broken. This midpoint is that of the propulsion block. A close below or above the mean threshold indicates the invalidation of the propulsion block, hence why you will have very tight stop losses and near zero drawdown entries. If you miss the order block entry, you now have a second chance to enter the price. This entry is even more explosive. Use the propulsion block to have a new near zero drawdown entry with the tightest of stop losses, high risk to reward ratios. Okay? Before ending the entire chapter 10, I want to explain more about this propulsion block. When price moves into an order block, for example, and price closes, so we have an up close candle as a bearish order block, price moves into that up close candle with another up close candle, and the next candle pushes back down outside of that order block. That up close candle that pushed into the order block is the propulsion block. As soon as price breaks that propulsion block, the low of that propulsion block, we should see the mean threshold of that up close candle that tapped into the order block respected. Enter as soon as price taps into the wick or body of the propulsion block. Okay? Now it is your turn to backtest. This is the most important part of creating your own model. It is your turn to now test out the model of your choice. What is the win rate like? What is the average return? So what is the average risk and reward? Do you like how price moves from your entry? Is it too explosive? Is it too slow? Do you need more of an explosive entry? Do you want more of a slower entry? Do you like that price gives you multiple chances to entry? Do you only want price to offer one chance to entry? Do you prefer to use a different entry signature? This is all going to be found out once you backtest and forward test your very own model. Okay? This concludes chapter 10. We are near the end of the TSR Masterclass number 1. There are 12 chapters. This is chapter 10. 2 more left to go. And you guys basically have literally everything you need to create money in these financial markets. You are seeing it already we have a majority of the group members, and I'm very proud of us when I say this, the majority of the TSR students are making money. Usually in the online spaces, in these online trading communities, the majority of students do not make money. Whereas in the case of TSR, the majority of students are making a shitload of money compared to what they used to make. Okay? That being said, do not give up. This is the time that you must push harder. When things are going good, you push harder because you know how life works. There's a cycle. Things are good and then they get worse. Things are good and they get bad. Things get good, they get bad. Things get good, they get bad. Why does this happen? When things get good, problems start to arise. You push them to the side. You forget. And then the problems hit. Then you need to solve the problems. Once the problems get solved, things get good. Again, the whole cycle starts again and again and again. That's just how life works. So what does that mean? When things are good, you know that things are probably going to get worse in a couple of months. So push harder. If you feel like you are learning more than usual right now, spend more time learning. All right, that's what I mean when I say push harder. It is now or never. All right, get back to the charts, continue studying what you learned today, and I will see you on Monday. Bye-bye.